Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to Peter Harris, Exec Chairman of Northbridge Industrial Services, a leading load bank rental and sales business that is soon to be renamed Crestcheek. So welcome, Peter.
Hi, good morning, Paul. How are you doing?
Yeah, very good. In fact, probably not as good as you guys, because we've just released a very good trading update. So big congrats on that with the upgraded expectations for 2022. So let's just start there.
Yes.
What's been sort of driving the improved trading performance and, sort of revised profit expectations for this year?
It's been pretty strong across the board. Really encouraging trading in the first half year. As you know, we both rent and sell load banks. We entered the year on the equipment sales side of the record order book again, and orders have kept coming in. So we've been working like mad to try and get the order book lead times down a little bit, and not really succeeded too much because orders have carried on in, and I'm sure we'll talk later about the new factory, which will help with that issue. But equipment sales have stayed very strong. A lot of that driven by data centers, but all sectors performing well. And then the rental side, we've continued to see not only the smaller recurring rental revenues going well, but also the major projects have been particularly strong this year. And that's the traditional areas that you see the major tests, which are extractive industries, marine, to some extent critical infrastructure. They've all done well. Well, we're starting to see now some pretty large tests in the data center environment as well. The scale of some of the individual tests has definitely ramped up, and we're picking up our share of that market, which is very encouraging.
And just in terms of, say, the Ukraine-Russia crisis, because it's a bit of a sort of like a two-edged sword, this one. Obviously, it creates supply chain problems across the sort of world for numerous industries, but equally, it's really sort of like galvanized, particularly Europe, and to a certain extent the States, to have security of its energy supply and move towards electrification. And consumers now, I mean, I saw the latest car figures this week. It was 20% electric cars. And the reason is because it costs half as much to effectively top up or to fill up your electric car as it does for a petrol car. And I know it's it's just an anecdotal point, but secular, if you look a bit further out, 2, 3, 4 years, this is not just a secular growth, but it's probably getting even stronger.
Oh, there's no doubt that's going to happen. Every time I talk about Ukraine, I can't not qualify it and say how disastrous that is and how sorry we are for all the suffering that's going on there. But it has highlighted a strategic weakness of the Western economies, their dependence for energy on states that are not necessarily friendly aligned politically. And galvanized, the word you used, is a very good word. I think there's so much thought and energy going on now into how those energy supplies are secured for the future, and a lot of that will be in different ways than the traditional generation that we've seen. And yeah, that's going to kick back into the testing and power reliability arena. So over the next few years, that's going to be, what's bad for many people will be quite good for us.
Yeah, and in terms of meeting that demand, obviously, you've got a lovely problem to have whereby, you've had increased orders, and you sort of ramp it up and delivery against those. Just in terms of the new factory, could you just talk through that, provide a bit of background in terms of, when can it ramp up to full 60% capacity, and how you're getting raw materials, and you're obviously the people side of it.
Yeah, well, let's deal with the raw material side first. I mean, the supply chain situation is probably better now than it's been for a while. It's still nowhere near where it was pre-COVID. We're more experienced at dealing with it, I think, is the essence of it. So we're generally getting supplies in. In terms of ramping up production, I'd say the supply chain is possibly the biggest constraint. Can our suppliers expand to the level we'd like them to expand? So we're working very carefully with the existing suppliers, looking at developing alternate suppliers, but we're very quality conscious. So we can't buy our critical components from anybody. So that is a little bit of a constraint, but we're confident that in the medium term, we'll get on top of that. The factory itself, it's actually been handed over now. Still little bits and bobs of works going on the grounds, but the actual building is complete. We're moving in, production starting up. As you know,
has the first load bank come off the production line now?
No, well, it takes a little while to build a load bank.
Yeah, no, I'm sure it does. Yeah.
But there are people working inside that factory now, which is a great relief to everyone because it's been a bit tight for the last year or so. And it'll add about 60% to our capacity. Probably about 50% of that is just straight floor increase, but the rest is just the ability to reconfigure our production lines in the larger space to work more efficiently. We'll probably actually achieve quite a bit of that production increase straight away, because we will want, firstly, to resolve the issue with lead time. So I think they've gone up to about 22 weeks. We'd like to cut those back to the normal sort of level of about 14. It'll take us a few months to get there, possibly by the end of the year or early next year. So that will use some of the capacity of the new plant. And then the other thing, as you know, we're expanding our rental fleet to meet demand. And we've been quite constrained in our ability to build rental equipment over the last couple of years, and the new factory will release that capability. And then finally, again, we've talked about this before, but I'll keep reminding you, we do want to put some inventory into places like the US market to shorten the sort of flash to bang time for our customers in the US, because we think there's a big opportunity there. So the factory is going to be pretty busy from right from opening the doors. In terms of once we get to the situation where we've finished our rapid reinvestment in the rental fleet and we've addressed the extended lead time issue, probably 2 to 3 years of natural growth to accommodate within the factory. Then we'll have to start looking even more at smarter ways of doing things. And we're already starting to look at where the next bit of capacity increase will have to come from.
Okay, and can you just give us a bit of detail on the importance of the new depots in Antwerp in Belgium, obviously, and Texas, the US, giving that beachhead into both places?
Yeah, I think the dominating motivating factor for both of them is actually the data center market. So let's start with Texas in the US. Texas, massive economy. I mean, it's bigger than most countries, even though it's only a state. And it's strong across all sorts of sectors. Huge marine business there, a lot of infrastructure, a lot of oil and gas, particularly on the extractive industry side. But it is a real hub of data center activity in the US. And as you know from previous conversations, we've really only scratched the surface of the data center market in the US. Most of our activity there has not been in that sector, and it's the strongest sector for us worldwide now. So why wouldn't we want to be in it in the USA? So Texas was an obvious place to go because it'll have routine load bank demand for our traditional sectors, but it's the right place to be to start penetrating the data center market. So that's really, really important for us. And the new equipment that's data center focused that we're actually sourcing from a US manufacturer just to speed up our entry into the market, that's going to be delivered very shortly. We've already put some of our own equipment into the site, so that's kicking off now. Probably won't be running at mature levels until sometime next year, but we're expecting it to be pretty busy from day one. Really, really important to our ambitions in the USA, which is one of the biggest opportunities we have as a company for sustained growth for the next few years. Then Antwerp, we had a small depot, which was literally just for package transformers, and that business is growing. So we needed to look for our own premises. This was a sublet operation. We wanted to have an independent premises for that. The Benelux market is again very, very strong on data centers. We have been quite active in that area, but all by shipping equipment in from our depots in France, in Germany, in the UK. And it makes a lot more sense to actually have a depot near the market. So when we knew we had to replace the transformer depot, it was a real opportunity for us to open a much larger depot and put data center focused equipment in there. And that again will just accelerate the growth we're seeing in data centers across Europe. So they're both really important to us.
And then once you've sort of like, you talk about the medium term, 2 to 3 years to get the factory up and to build your rent. So let's just think about that in terms of just hypothetically. We've got your rental fleet at the moment is, I don't know, it's worth sort of like £27 million, I think, is your gross book value. Your net book value is obviously after depreciation. But let's just say it's for all intents and purposes, in today's money, as in like if it was today's money, but to buy it all brand new, it was 20. How big would you ultimately like the rental fleet to become? Is it double what it currently is, size-wise?
Well, yeah, I mean, that's the order of magnitude. I mean, if you look at our 5-year ambitions, we're in a growing market, which is a lovely place to be. We want to grow market share by progressing in areas like the US, where we're much smaller than our global market share, and it's a huge part of the global market. Yeah, we're sort of 9 to 10% of the global market now, as best we can measure it. So we'd love to think over 5 years, if, you know, given our capacity, given our many strengths and international representation, don't think it's unreasonable to take that 9 or 10% to 15%. If the market continues growing at 5 to 10%, you know, do the maths, you know, we should be twice the size company we are today. And we like the mix of 50% rental, 50% sales. You know, it oscillates around those numbers, but it works extraordinarily well for us. So there's no reason for us to plan to change that mix over the long term. So if we're going to do that, logically, we'll need twice the size rental fleet we have today over that time period. Yeah.
Good. And that will drive your return on capital employed, presumably, as well, won't it, I'm guessing?
It will, yeah. I mean, you have to be a bit careful about putting lots of new equipment in, because the return on capital is sort of a little bit flattered by our conservative depreciation policy. But we're getting quite creative about how we're putting the capital in. We're doing a lot of buyback and rework of equipment. So yeah, we think we can actually achieve that while growing, at least maintaining and probably growing returns on capital. Yeah.
Well, considering
your cost, are over 20% now. So.
Yeah, well, considering your cost of capital is probably less than half of that, certainly with cash in the bank, then it drives significant shareholder value, whatever it is, double digits.
That's the cunning plan. Yeah.
Yeah. Now, can you just talk through the how you sort of with the sales price increases in terms of recovering some of the input cost inflation?
Yeah, we've been able to do that. Yeah, we're extremely conscious that we don't want to put sales price increases through that we don't have to. But our customers, yeah, a lot of them are in manufacturing themselves. A lot of them in the electronics industry, so they know the issues with supply of scarce metals, etc. So we're talking to an educated customer base who won't allow us to put prices increases through that are not justified, but will allow us to put justified price increases through. So with dialogue with our customers, we've been able to protect our margins, even in times of difficult supply chain and inflation. And we're confident that will continue. And yeah, we've got another price increase scheduled for July, just to reflect what's happened in the last 6 months or so. And what we are finding now is it's not across the board price increases. It's quite targeted at individual pieces of equipment, because different pieces of equipment obviously have different designs, different actual critical components in them. And if they're drawing down on something that's in real short supply, and we've seen a big surge in prices, there'll be a higher price increase on that piece of equipment, whereas others might not need a price increase at all.
And then just turn into sort of just the last bits and pieces of the Tasman disposal. You mentioned it's going to in the statement. It's sometime in the summer. Is it the final?
Yeah, we hope so. We actually have offers on the table now. We're just going through assessing who we want to take forward for final negotiations. They're sensible offers. They're within the sort of ambit of what we were expecting and built into the announcement of the likely overall outcome of the Tasman disposal. I think the main things that will dictate when we announce the final disposal are more the regulatory side. It's quite complex going through business change in the Middle East. So we've got a few hoops to jump through there.
Yeah, I don't envy you doing that. That's for sure.
Well, that's okay. But I mean, substantially, it's done. Everything's gone well with the Australia and New Zealand disposal, and the Middle East one is relatively small in the overall size of things, and confident it will happen.
Yeah, I think with those proceeds on top of the sort of the highly cash generative nature of the business, and a very capable finance director who seems to be managing the cash like a hawk as well. That means you exactly, you see that you're building the sort of like a good sort of fortress of cash on the balance sheet, and obviously you're buying back shares along with sort of like paying a dividend. Is there anything else on the cards in terms of investment or?
Well, we're constantly looking at opportunities to invest in growth. You know, we're in the very fortunate position that as those opportunities come along, we can actually exploit them at the moment, because, you know, if you look at the forecasts in the marketplace for where we're likely to be, even with the share buybacks, paying dividends, already relatively high levels of investment in the fleet, we're looking at being pretty much zero debt net or small net cash at year end. So, and we've got, you know, a significant asset base to borrow against if we want to use any of our existing borrowing facilities. So we're really, really well positioned to pursue additional opportunities as they arise. We have no immediate sort of external M&A type activity on the horizon. We're very, very focused on growing the existing business through organic growth, because we've just got a lot of opportunities, and that's the best, lowest risk way to grow a business, in my view. Doesn't mean, though, if something came along that could really accelerate us further and was right within our sort of current strategic plan, we wouldn't look at it very, very hard.
Yeah, when you've got some organic growth opportunities that can offer you sort of return on capital employed of 20% plus, then it's a bit of a no-brainer, isn't it? You sort of buy or build. Well, the build is the cheapest and most effective option there.
Yeah.
So just sort of like shorter term, in terms of future news flow, etc., is it going to be a sort of like a half-year trading update in July or around that time?
Well, probably the next trading update, given we've got this one going out with the AGM. The next one we traditionally put out around mid-August, ahead of the interims, and the interims will come out at the end of September, possibly first week October, and there'll be another trading update at that stage. So I think you'll have two more running into the autumn, and yeah, we'll just keep you posted on how trading's going.
And you'll announce presumably the final bits and pieces on the disposal when it gets done, I guess, as well.
Yeah, we will. That'll be in one of those, I'm sure. Yeah.
Great. Well, big congrats again, and really looking forward to hearing further good news going forward. So welcome, well done, Peter, and speak to you soon.
Well, thanks, Paul. It's been a good 6 months.
Bye.
Thanks.